Hello, this is John Piper with the weekend video clip, and it's Saturday the 28th of December. I'm looking here at a chart of the FTSE 100, the daily chart. This is also the second part of the technical trade of this month. Now this chart, FTSE peaked in May, as we know. We saw 5 waves down. The position's been open in the sense that this could have been an A, B, C, with new impulsive action coming in here. Didn't quite fit the scene because the nature of the action was corrective. And what's now happened is that we've seen, as I've discussed previously, an ABC decline here, B wave here, and a final 5-part C wave, which I've discussed. I gave a buy signal on this day here because of the buying spike on the Monday. On the Wednesday video clip, I suggested using the news from the Fed as a buying opportunity, but for those of you who wanted mechanical stops, I put a stop in at entry, having taken half profits. If you did as I suggested and used the news as a buying opportunity, you'll still be long. We've caught a really good move. The mechanical stop was taken out, so you got half profits. It's a matter of how you want to trade, really. As I've said before, this service is all about developing your trading abilities, becoming using the markets as a regular money-making machine. For you to do that, you've got to be serious about it. So I think this is a fairly good illustration, really. Anyway, the point I want to make today is what comes next, as ever. And basically, we have now got a clearly impulsive move here. I mean, ideally we need new highs, but we'll look at that in a minute. The key level here is the level here around 6,880, and we have the all-time high around 6,950 back in December 1999, which is of course almost sort of 14-15 years ago now. Blimey. Anyway, let's have a look at this in a bit more detail. Alright, here's the hourly chart. Here's the low on that Monday. Here's the first rally. We've got a 1. And you've got sort of maybe a 2 to there, maybe a 3 to here. It's been, I mean, since that news came out, it's been pretty much one way. So it's a great trade if you stayed with it. Now, looking at Elliott, we'd expect some kind of fourth wave coming in. Next week is the pre-New Year week, so that it may be into the new year. Then I think it's quite likely we're going to see new all-time highs. I think 6,950 is probably going to happen. I think 7,000 is going to happen, and that might complete a major 5-wave advance. Now, I think the big question here is: are we going to see some kind of peak? Or are we going to see some kind of massive upside acceleration, however unlikely that may seem? Because at the moment, the chart pattern does look like it needs more upside acceleration. Let's have a look at the weekly again. Sorry, I mean the daily again. The reason being that if this is a correction, okay, all well and good, let's just discount the 5-wave form. We then got a 1 there, a 2 here, and we've got a 1, 2, and now a 3. So if that's a 3-wave, then having seen the 5 waves I'm talking about, we could then blip down a bit in January, again suckering in the bears, although I think we probably want to go short then because it could easily be a major move, but that could also be corrective and then see an even bigger move coming in. So next year, the early part of next year could be fairly critical, and I'm looking to take some position, certainly short initially, because I think we're going to see some downside. But if the downside doesn't work out and just starts to get dithery, then definitely a long. I mean, the key levels here are the low here, which is around 6,420 as I recall. I mean, that gets taken out. That would negate the pattern, and of course the highs. I think the highs are pretty much a foregone conclusion. I shouldn't really say that, but the wave pattern certainly suggests we're going to see new highs. Let's have a look at the Dow. Right, the Dow is plunging ahead above 16,000 now. You do often see follow throwovers. We have got, again, clear 5-wave advances here. 1, 2, 3, 4. Now a 5th wave coming in. So, I mean, there's a much clearer case for a major peak here. Let's look at it a bit shorter term. Okay, this is the daily chart. You can see the breach of that trend line there. You can see 5 waves here. 1, 2, 3, and then a regular 4 here. And now a 5th wave coming in. Although again, this could be a 3rd wave. So again, there are cases where just keep on going. Also, of course, there's a wave 1 here, wave 2 there. So I mean, certainly we're going to see pullbacks. It just depends on how severe they might be. I think FTSE might be a better guide at this point, in fact, because the pattern's somewhat clearer here. If we look at the hourly chart here, we can see this trend line being tested, fail, break, tested again. And there's clearly a 1, 2, and I rather like FTSE, the third wave. So again, I've got a fourth wave, so I'm going to fourth wave down to there, and then a bit more upside. Certainly again, calling for some kind of pullback, slightly more important pullback early in the new year, with a bit more upside to come before that comes in. Look at the Nikkei now. Okay, well the Nikkei has now made it above 16,000. I said that the recommendation was to take 50% profits above 16,000, so that's now been triggered. We've gotten around the 10,000 level, so that's a good trade. And the investment vehicle recommends up 120% last time I looked, so that's doing particularly well. In fact, better than the Nikkei in the sense that we've got 10 to 16 to 60%, so it's more than double the performance of that move. Right, well, I've been saying we'd see this move. We've got a 1, 2, 3, 4, 5, which is why I thought we were going to see it. But we've already got 5 waves here, so the case is that we might well see a pullback now. But again, there's a bigger pattern here. Let's go down to a daily chart. I mean, these patterns can be counted various ways, but from here it looks clear we've got a 1, 2, 3, 4, and a 5. Not yet finished, of course. We haven't seen any kind of sign of a high yet. This looks like an ABC, so perhaps maybe this is some kind of triangle here. Not a terribly wonderful triangle, but some kind of consolidation with a breakout from there. So that could be a corrective wave, I guess. And this could be new impulsive action coming in. But again, having seen 5 waves, we'd expect a retest down to 15,000 at least. Anyway, the recommendation was to take 50% profits, so that's now been triggered. Incidentally, we are running the Pro Trader course in the new year. We only take 20 new clients on this. This will be between Mark Cameron and myself, with Andrew assisting when as needed. And the idea is that for those of you who actually want to be serious about trading, want to become professional, the aim is to build up your trading profits to 10,000 a month by the end of the year. Now, there are 2 factors in trading profits. One is the number of points you make, and we're aiming for 200 points over the range of the various markets we trade. So the other factor is, of course, the size per point. And the full year's course will be developed to achieve those 2 pointers by the end of the year. Although, of course, it's up to you to actually do that. But there'll be full mentorship. It's quite a program. The actual price is not insignificant, but it's less than 10%. In fact, 1 month will cover it if you hit our target, basically. So that's available. I say just 20 clients. So if you're interested, please drop me an email. I'll send you more details of that. There will be a flyer coming out later on. But I say just 20 people maximum on that. Okay, now look at the T-bond. It's been ticking lower since late last year. I mean, it doesn't, at this moment in time, it could be corrective, but it's making new lows now, though rather ditherly. Of course, it's a futures chart, so the pricing does change slightly over time, depending on the expiry levels. We're really seeing a bit of acceleration here. We're 50% short of the T-bond, pretty flat at the moment, but it's holding its own. So that one's going fairly well in terms of we're still positioned there. I'm not inclined to add to this at the moment. I will add to our shorts on the other equity markets once we see some evidence of a peak, which I say may go up at this point. I think this is one of these turning points where, although everything else seems to argue for markets to go down, the big surprise would be that they would go up, which of course is what markets do all the time. They're always giving us these big surprises. The majority are always wrong. For obvious reasons. There's a clear logic to this. The reason the majority are always wrong is because they're positioned the wrong way. So if everybody thinks the market's going to go down, that means that they're not in the market, or they're even short. So as it goes up, they're forced to close their shorts or buy the market to get involved. So it's there's a clear logic to the way markets work, and it's often very difficult to actually realise that and to put yourself outside of the psychological whirlpool, as it were, because that's what the market is. It's like a psychological whirlpool that drags you into it, often at the wrong time. I mean, obviously it's not good being dragged into a whirlpool, so I think the analogy is fairly accurate. Okay, let's have a look at gold very quickly. This is the daily chart. We saw the low around 1200 back in July. Sorry, just the end of June, I think. ABC. I was thinking we might see a B and then a C. That hasn't transpired. Instead of which we've just seen this continued decline, taking us back down to 1200. So if this is an ABC, some kind of corrective wave, obviously, we may now see another bounce, which could be some kind of fourth wave, and then a final pullback, and then maybe something will happen. But again, gold looks pretty dreary at the moment. We need to see something dramatic to change that. And now a quick look at Forex. The weekly chart of pound dollar. You see the big triangle we've been discussing for some time. It's now seeing the apex of the triangle, and the pound is now trying to get trying to get above the lower trend line. Hasn't succeeded yet. Whether it will, I'm not too sure. There seem to be, well, at the end of the day, you try and look at the fundamentals, you tend to get a very confused picture at the end, because ultimately, the price merely reflects the balance of what's going on, really. Right now, there are no negatives in sight. This is still probing up, and there's no real reason to short pound dollar. Let's look at pound. All right, pound euro. We've got this A, B, had a perfectly good 5 there, but then we started falling back. Now we've gone up again. Slightly indeterminate move, but 120 is clearly a key level here, around there, and the market is probing, falling back, probing, falling back, probing, falling back, and now probing. There's a stronger case for shorting pound euro, but again we need some kind of signal rather than leaping at the moment. So look at the shorter term. This is the hourly chart. All you can really say is that there's no sign of a peak. It just looks like a corrective sort of ABC type thing. There's a buying spike there, which is a positive, and there's resistance up here, obviously. So nothing much there. Right, euro dollar, no change. We've got the great big triangle again, going back a number of years, 5 years now, I think it is, and well documented. But this ABC rally keeps looking like it might fail, and then just keeps rallying. So again, we've got a rather dithery situation here, where there remains a case it's going to go up to 145. It's just having a hard time doing it, and there remains a case that this might be a feeble rally that's going to fail. So again, best avoided for this at this point in time. Right, sorry, quite a long report today. I hope you found it interesting and useful. I think it should be a pretty key time in January on the equity markets, and there's this big decision point where we could just go higher. It'd be foolish to ignore that possibility, but there are plenty of negatives which could change that. But again, it's all down to investor psychology. If everybody's feeling bearish, then it's going to go up. Have a great weekend. I hope you enjoy Christmas. All the best for 2014. I'll be back with a report if something happens next week. It's probably fairly unlikely, but I will certainly be on call, as it were. And thanks for listening, and thanks for listening throughout 2013, and I hope 2013 works out well as well. Thanks again. Bye for now.